day everyone, welcome back to another weekly mentorship breakdown video. In today's video we'll be taking a deep dive into pound USD, GBP USD. That's what I'm going to focus on today. So this is basically another follow-up through to last week's dollar index mentorship video, and then last night's Euro USD mentorship video where I was explaining why I'm looking for longs on Euro USD. Right, so same applies with the pound USD. So we're going to take a closer look into pound USD and why the pair continues to position itself for further upside moves from both a macroeconomic and a price action perspective, right? So we're going to be covering the following: the BoE narrative, that is the Bank of England, guys, and then we're going also to be covering a bit of US dollar weakness, the real yield dynamics, geopolitical developments, institutional positioning, and your higher time frame price action structure. That's what we are going to be focusing on, and then ultimately we are going to highlight the key levels that I'll be personally monitoring going forward, that is on pound USD. Now, one thing I want everyone to understand before we begin this: the strongest moves in Forex happen when macroeconomic narratives and price action structure align together. I mentioned this last night again, and right now the alignment is beginning to favor pound USD upside moves. In other words, long trades. In other words, bullish trend, right? So the macro overview on pound sterling strengthening. Sorry about that. So the macro overview, why sterling is strengthening. So pound USD is also referred to as sterling, guys. The British pound is entering a very interesting phase, fundamentally speaking. Over the past several weeks, the broader macro backdrop has quietly shifted in sterling's favor, right? So if I'm to go on the weekly chart, you can clearly see what I'm talking about, right? So we've had 1, 2, 3, 4, 5, 6 weeks where pound sterling has been aggressively moving to the upside, right? And the market is now beginning to reflect that through the price action. The biggest catalyst came from Bank of England on I think April 29. Yeah, I think April 29. That's when we had the policy meeting from the Bank of England. Let's just go to their website quickly. Interest rates and bank rate. This is for the Bank of England, right? So at first glance, the decision looked neutral, right? What do I mean by the decision? That is to keep the rates at what? 3.75. The inflation rate is roughly around 3.3%, right? So the Monetary Policy Committee voted, I think it was 8 against 1, to hold interest rates steady at 3.75, as you can see here. And the next meeting is coming in at 18 June 2026, right? But what caught the market's attention was the single vote, right? One policymaker actually voted for a rate hike to 4%, which was, I think that's a bit weird. But, you know, these are well-learned guys that we are talking about. Yeah, but it's also weird that only one guy voted. Now, this may seem like a small detail to us retail traders, but institutionally, this changes the narrative significantly, because instead of the market viewing the Bank of England as preparing for aggressive easing, investors were forced, right? Investors were forced to acknowledge the hawkish pressure still exists inside central bank, right? And in forex markets, guys, expectations matter more than the actual decision itself. The single vote shifted sentiments towards the possibility that UK rates may remain elevated for longer than previously expected, than what the market anticipated previously. That naturally becomes supportive for pound USD, for sterling itself, right? So looking at rate expectations and why they matter, another factor supporting, which is a major factor that's supporting pound USD, is the market's expectation for future Bank of England tightening, right? Right now, money markets are pricing in approximately 60 basis points worth of additional hikes before the end of 2026. That effectively means markets still expect at least 2 more quarter point hikes from the Bank of England, right? This is critical because medium and higher time frame FX trends are heavily influenced by interest rate differentials between economies, right? What do I mean by this? For those in the mentorship, you know already what I'm talking about here. Let's just go back. Let's see if I can bring the interest rates differentials of the major economies. Let's see where are we. Just a sec, guys. Let me see if I can get you the interest rate differentials between the major economies, right? So we've got central banks here. Let me just search central banks, right? And this is under the tools and sections on investing.com. So currently Bank of England is sitting at 3.75%, and you can see off the other central banks that we look at: ECB 2.1, Fed 3.7. Then you've got the rest: RBA, Bank of Canada, and RBNZ. So it's up to you now to take note of these interest rate differentials, because they matter when it comes to our directional bias. They matter in identifying which currency is going to get weaker against another, right? So take note of that lesson that we did. I think it was week 3, week 4 of the mentorship, interest rate differentials. And with us looking for a dollar move to the downside, take note of the narrative. If dollar is bearish, how do you apply the interest rate differentials? But we're not going to talk about that right now. So currently, UK interest rates are already trading near the upper ranges of US rates, or same. They are same, 3.75%. So if the Bank of England continues maintaining a relatively hawkish stance, while the Federal Reserve become increasingly cautious, that rate differentials slowly begins favoring pound over the dollar, which is what we've already started seeing in the market. And that is one of the core reasons why pound USD continues finding support fundamentally, right? Now, the dollar side of the equation, remember, a bullish pound USD setup is not only about pound strength, it is also heavily dependent on dollar weakness, right? And currently, the US dollar is facing several structural headwinds. There's a lot of stuff that's pushing dollar to the downside. One of the biggest drivers is declining US real yields. So I don't have to go into detail with this because I've already tackled it in the past 2 mentorship videos, right? So even though nominal US interest rates remain elevated, inflation pressures are preventing real returns from becoming attractive enough for global capital. I spoke in detail about this last night. And this is something many traders misunderstand. The dollar is not strong simply because rates are high. The dollar is not strong simply because rates are what? Are high. The dollar is strong when real yields are attractive relative to the rest of the world. Now, that weakens the dollar structurally. At the same time, markets are becoming increasingly cautious regarding the broader US growth outlook. The recent labor market data has shown that job growth is becoming increasingly concentrated in defensive sectors such as healthcare and social assistance, rather than productive growth sectors like manufacturing and technology. Right? That signals slowing economic momentum beneath the surface. Right? And as confidence in the US economic acceleration weakens, so does long-term demand for the dollar. We are going to start seeing dollar facing huge pressures to move to the downside. Huge bearish candles on higher time frame, whether it's the weekly, whether it's the monthly, whether it's the daily. We're going to start seeing those big bodied candles with huge volumes moving towards the downside. We also have the matter of geopolitical developments and risk sentiment. Right, another important factor supporting pound USD has been recent de-escalation in tensions between United States and Iran. As geopolitical tensions eased, demand for the US dollar as a traditional safe haven asset also declines. Right, this triggered broad-based dollar weakness across the market, and this is important. Right, it's very important because in environments where the dollar weakens broadly, pound USD doesn't need extraordinary pound strength to rally. Dollar weakness alone can create strong upside momentum in the pair, pound USD, same as Aussie dollar, NZD dollar, AUD USD. There will be strong upside momentum in those pairs, and this is exactly why we have recently seen sterling appreciating aggressively against the US dollar. Right, the market is gradually rotating away from defensive dollar positioning and back into higher yielding or relatively stronger currencies: euro, pound, NZD, CHF, yen. Markets are gradually rotating into those currencies. Another additional factor that is supporting pound USD, right, when we look beyond central bank policy and geopolitics, there are several additional macro factors supporting a bullish case for pound USD. Number one, the UK economy has shown greater resilience than many investors initially expected. Right, despite elevated inflation and slower growth conditions globally, consumer spending and labor market conditions in the United Kingdom have remained relatively stable. That's why we have seen a pound USD moving to the upside also. Secondly, markets are increasingly pricing in the possibility that the Federal Reserve may eventually need to shift towards a softer policy stance if the US economic conditions continue to deteriorate. And once markets begin anticipating future Fed easing cycle, the dollar typically starts weakening long before actual rate cuts occur. The appointment of Welsh could be key, could be a very starting point, so take note of the Senate later on during the day. Number three, global risk sentiment has gradually improved. When risk appetite improves, investors reduce defensive dollar exposure. Capital rotates into higher beta currencies, and pound tends to benefit from that environment. And lastly, institutional flows are beginning to favor diversification away from the dollar overall. As confidence in US expansionism weakens slightly, capital allocation is broadening towards other major economies and currencies, and that includes sterling, that includes the pound. Now, when it comes to higher time frame price action analysis, right, which is what almost every retail trader is, the first thing that they do, they forget about the macro perspective. They forget about the micro perspective. So now let's transition into the technical side from a pure price action perspective. No indicators. And honestly, the structure here is becoming very clean. Let's go to the monthly quickly. The structure here is becoming very clean, right? You can see on the monthly time frame, take note of 2026 high, which came in January. I'm just going to highlight that quickly. I'm going to do this quickly, guys, so that the video is not that long. Right, so that's this year's high coming in at around 1.38, $1.38, somewhere around there, right? $1.38. That is crucial. Why am I saying it's crucial? If you look right there, July 2021, that's where we had our last up close candle, right? We had that last up close candle before the COVID expansion to the downside. We are back at those levels. We came back to those levels September 21, October 21, and then again this year, January 2026, right? That price point is key. So we're talking of $38,695 in terms of the draw on liquidity. If we are saying price is bullish, so in terms of the draw on liquidity, we are looking at that level there as a crucial point, right? Another thing that you need to be aware of, where is price coming from? We are coming from this inefficiency here, right? We are coming from this inefficiency here. Ivan, why would you bother highlighting that? This is where price found support. So we've got January here, 26, we've got February, we've got March, boom. Price has now moved to the upside. And with that move to the upside, what did it create on a higher time frame? We now have a clear, high probability bullish order block, which is accompanied by a fair value gap right here. Now it might look smaller on the monthly chart, but trust me, when you go on to a lower time frame, that's huge, right? So we've got a fair value gap there, and then we've got our monthly OB. We've got our monthly OB right there, right? Let me just zoom in a bit. So already we've highlighted the draw on liquidity, where we anticipate price to go to. I've already highlighted two levels, two price points, two zones. Fair value gap OB, where you anticipate price to find support before it pushes to the upside. Now that's on the monthly chart. I'm gonna go straight to the daily time frame. All right, I'm gonna go straight to the daily time frame because I need to focus on important levels, right? So this is what I'll be anticipating here. Let me just make this look proper, guys. So we're looking at this level here, $35 is an ideal area for price to move to the upside, is an ideal area targeting internal range liquidity above February high, above January high, right? So on the daily time frame, pound USD has spent a few months trading under bearish pressure following the rejection from the 26 highs, that is the $38.24. But eventually price found strong base around the $31, $32. We're talking of this range here. Remember the bullish order block on the monthly chart. Now what makes this area significant is not just the reaction itself, it's the way price reacted from it. The rejection was aggressive, decisive, and impulsive. This fair value gap on the monthly chart, this one here, that's the one where price reacted from, and then it pushes to the upside. And more importantly, price eventually broke above the previous lower high in the bearish sequence. Price broke above this guy here. these two here, this relatively two, where they change in character, they change instead of delivery. From a market structure perspective, this is extremely important because once price breaks a significant lower high after an extended downtrend, that signals a market structure shift. In simple terms, right, the previous bearish cycle has likely ended. This previous bearish cycle has likely come to an end, and buyers are beginning to regain higher time frame control. At that point, the burden shifts back into sellers to prove they can reclaim momentum, and currently price action is not showing that yet, right? When you go to the 4-hour structure, now I'm not going to mark all the pre-D areas, guys, the premium and discount areas on the charts. That's your own work to do. Right now I'm giving you a narrative to what to work with, right? Now the 4-hour structure is clearly showing us reaccumulation phases, right? When we zoom into the H4 time frame, we can see that after the impulsive bullish expansion, price entered a consolidation. Right. There's the bullish expansion from the monthly imbalance, the monthly fair value gap. But after that, we went into a consolidation, right? From April 14th to April the 13th, we had price stuck in a consolidation, right? But this consolidation does not currently look distributive, right? Instead, it resembles reaccumulation. What we are seeing is higher lows continuing to form, compression building beneath resistance, price respecting bullish structure. Price respecting bullish structures, you can clearly see we've got uptrend, old lows remains intact, old highs violated, price pushes, old high violated, old high violated. Chances are we are violating this probably today. We're going to trade above that, right? So this type of environment occurs when institutional participants continue accumulating positions while weaker hands take profits instead of inside the what? Inside the range. And eventually, once enough liquidity builds above resistance, price tends to expand aggressively in the direction of the dominant trend. For me personally, a clean 4-hour candle close above resistance would serve as confirmation for a bullish continuation, right? Like what we are currently seeing right now. Once this candle clears the high of May with this decisiveness, once we clear that high, that's a clear signal that price is going to continue in the upside momentum. Now the key levels that you have to watch, right? To the upside, the first major resistance zone sits around $35 to the upside, and it's around $35.93 to $36, zero of which we are already above those price points, right? This is a very important area because it aligns with previous. Let me go on to the daily and zoom in. So we're talking of $35, $36. We have already broken that structure with today's candle right here. So this is very important area because it aligns with previous swing highs 1 and 2, higher time frame liquidity 1 and 2 and 3. We've got internal range liquidity of buy stops, and it's basically a psychological important resistance region. If buyers can achieve a strong daily close above that zone, then momentum towards $37 is going to start building right there. So we're looking at $37. Momentum towards this range starts building up, right? Beyond that, the broader higher time frame objective remains 2026 highs, coming in at $38, $38, let's say 500 from an institutional perspective. So here the high is at $38,700. So that's like the broader higher time frame objective. On the downside, immediate support rests near $35. Let's see, $35.10, somewhere around this level here, right here. You can see we've got a bullish order block there, price finding. So this is our immediate support and resistance. So you'll be looking probably for a structure like, once we break above this high, a retracement, reaccumulation for a push to $37, then probably a retest of $36,500 for another push to $38,700. That's the structure you'll be looking for. Obvious, price is fractal, guys. It's not going to be really like that. So as long as price continues defending higher lows and maintaining a bullish structure above support, the overall directional bias remains bullish. So overall, the current GBP USD environment, the current pound USD environment presents a very compelling bullish case. We have a relatively hawkish Bank of England, and market expectations for additional UK rate hikes are quite high. Broader US dollar weakness, declining US real yields, improving risk sentiment, and a bullish higher time frame price action structure. That's what we have currently on pound USD, and this is exactly the type of alignment professional traders look for, because when macro narratives and price action structure support the same directional bias, probability improves significantly. Now, of course, there are still risks. Markets remain sensitive to the following, right? Geopolitical headlines, inflation surprises, central bank communication, and shifts in bond yields. Those are some of the things that still remain as a risk factor to take note of for any downside movement. But as things currently stand, the path of least resistance continues favoring pound USD upside moves, right? Even if you look at today's price action, guys, let's go to 4-hour time frame. If you look at today's price action, obviously market opened with a gap to the downside, market gapped to the downside. By Friday close, you'd have noted this favorable gap right here. Just giving you a nugget here. You'd have noted this imbalance in the form of a favorable gap, and then market jumped and opened with a gap. That was manipulation, clear manipulation. Once that happened, because market opened right here around $35,585, so say $36, no, $35,600, and you can see that is right on this last down close candle here before an expansion to the upside. So practically you have your bullish order block right there, and that will be sensitive now to what? To price. We even have another favorable gap between these candles low and the last down close candles high, and that's where market jumped with a gap during opening, and then it pushed to the upside. You can see how price expanded now, right? Now look at this down close candle here before the expansion. That's inside the favorable gap, right? Once price opened with a gap to the downside, you wait for price to move towards, you can already see the gap. Now this is just your reaccumulation, 1, 2, 3, 4 hours of reaccumulation before another expansion, reaccumulation again in fair value. Now for those in the mentorship group, you can clearly see right there, there's your PD array, there's your discount array, optimum trade entry, push up to the upside. Where's your target? 1, 2, 3. Those are your targets. That's a trade. You see, that aligns with what? With the directional bias for pound USD, right? So that's pretty much what I wanted to share with you guys. Unfortunately, most of my videos are going to be quite detailed at this moment in time, because I'm giving you a narrative that you're going to carry with for the next 2-3 months, right? As always, don't get trapped focusing only on short-term candles. Focus on understanding market structure, capital flows, central bank expectations, and the macroeconomic narrative driving price. Because once you understand why the market is moving, your decision making becomes far more consistent and disciplined. And with that, guys, trade safe, protect your capital, stay patient, and I'll see you all in the next mentorship session. Thank you.